What if I told you the United States just lost $700 billion worth of trade dominance? And the country stepping in to take its place isn't China, isn't the European Union, and isn't even an emerging Asian giant. It's Canada? That's right. While headlines keep us focused on the US, China trade war, or Europe's energy struggles, something far quieter has been happening right next door. Canada, often dismissed as America's polite neighbor, has been climbing the global trade ladder, expanding exports, securing new trade deals, capturing market share the US has let slip away. Let's put this into perspective. The US now runs one of the largest trade deficits in history, and its share of global exports has steadily declined. Meanwhile, Canada has not only become America's #1 trading partner, but also positioned itself as a trusted supplier of energy, food, and critical minerals for countries around the world. While Washington debates tariffs and protectionism, Ottawa has been quietly building relationships, signing free trade agreements, and cashing in on global demand. Why does this matter? Because trade isn't just about goods, it's about geopolitical power, alliances, and leverage. When a nation loses its grip on trade, it loses influence. And when a middle power like Canada gains that ground, it reshapes global supply chains in ways few people notice until it's too late. In this video, we'll break down how Canada managed to quietly replace the US in key trade arenas, what that missing $700 billion really means, and how this silent shift could reshape the balance of power in the global economy. The $700 billion question. So what exactly is this $700 billion figure we keep mentioning? It comes from the widening US trade deficit and the relative decline in its share of global exports. In simple terms, America is buying far more from the world than it is selling, and that gap has ballooned into the hundreds of billions. For decades, the US could afford this because the dollar was king and global trade routes depended on American demand. But now, that assumption is cracking. In the past 10 years, the US trade deficit has surged, hitting record highs as imports from Asia and Latin America outpace exports. Manufacturing that once anchored American trade has shifted overseas. High-tech goods like semiconductors are increasingly sourced from foreign suppliers. The result? America's global export share has slipped from nearly 15% in the 1980s to closer to 8% today. Enter Canada. While the US has been bleeding influence, Canada has been steadily climbing. In energy alone, Canadian exports have soared. Oil and natural gas flow south to the US in record amounts, while liquefied natural gas terminals on the Pacific coast are gearing up to supply Asia. Beyond energy, Canada's wealth of minerals, including rare earths critical for electric vehicles, have positioned it as a strategic supplier for both the West and Asia. Add in agricultural exports like wheat and canola, plus a growing technology services sector, and you get a picture of a country filling the trade gaps America once dominated. But here's the real kicker. That $700 billion loss isn't just about numbers on a spreadsheet. It's about trust in US supply chains. When countries and companies look at America today, they see unpredictability. Tariffs one year, trade wars the next, sanctions reshaping markets overnight. By contrast, Canada is seen as stable, reliable, and pragmatic. That trust translates into contracts, partnerships, and long-term supply agreements. All things that quietly but steadily shift trade power away from the US and toward its northern neighbor. America's fall from trade dominance. To understand how Canada gained ground, we first have to understand how the US lost it. After World War II, the United States was the undisputed leader of global trade. Its factories produced half the world's industrial output. Its ships carried goods across oceans. And the dollar became the backbone of the international financial system. For decades, the phrase "made in the USA" meant quality, dominance, and reliability. But by the 1990s and 2000s, things started to change. Globalization promised cheaper goods and higher corporate profits. The US leaned into outsourcing. Manufacturing jobs moved overseas, especially to China, Mexico, and Southeast Asia. The US consumer economy thrived on imports, but its role as a global exporter weakened. America became a buyer more than a seller. Then came the China factor. As China joined the World Trade Organization in 2001, it became the world's factory floor. American corporations were happy to use Chinese manufacturing for lower costs. But in doing so, the US ceded vast swathes of its industrial base. The result? China surpassed the US as the world's largest exporter. America grew increasingly dependent on imports for everything from electronics to pharmaceuticals. Attempts to reverse this trend often backfired. Tariffs and trade wars under recent administrations alienated allies. They raised costs for American businesses and consumers. Protectionist policies failed to rebuild industries, but they succeeded in making the US appear less reliable as a trading partner. And then the pandemic hit. Suddenly, the world saw how fragile US supply chains really were. Shelves went empty. Factories shut down. The US was caught scrambling for basic medical supplies. Meanwhile, other nations, including Canada, positioned themselves as more stable, less volatile alternatives. In short, America's fall from trade dominance wasn't a sudden collapse, but a long erosion. Outsourcing, reliance on imports, overconfidence in the dollar, and self-inflicted trade wars all chipped away at its position. And in the space created by that erosion, other countries, especially Canada, stepped in to claim what the US left behind. The rise of Canada as a trade powerhouse. Canada's rise in global trade may surprise people who still see it as America's quieter sibling. But the transformation is real, and it's been building for decades. Geography is the first advantage. Canada sits atop vast natural resources and shares the longest border in the world with the United States. This means it not only has direct access to the US market, but also acts as a gateway between North America, Europe, and Asia. Energy is Canada's crown jewel. With massive oil sands in Alberta, hydroelectric power from Quebec and Manitoba, and growing liquefied natural gas infrastructure, Canada has become an energy exporter trusted by both the US and Europe. In a world desperate to move away from Russian supplies, Canadian energy looks more appealing than ever. Then there are natural resources. Canada holds some of the largest deposits of rare earth minerals outside of China. The same minerals needed for electric vehicles, smartphones, and military technology. As Western nations race to secure non-Chinese supply chains, Canada's mineral wealth has turned it into a strategic partner. Agriculture is another strength. Canada is a top exporter of wheat, canola, pulses, and beef. Its food exports not only serve the US, but also supply growing populations in Asia and the Middle East. This agricultural base gives Canada influence in regions where food security is a top priority. But it's not all about natural resources. Canada has also built a reputation in finance and technology. Toronto has become a leading fintech hub. Montreal is known for aerospace and AI research. Vancouver is home to thriving film and digital industries. Combined with a stable banking system and a reputation for cautious economic management, Canada is seen as a safe bet for investors. And perhaps most importantly, Canada is viewed as a reliable middle power. Unlike the US, which swings dramatically between political extremes, Canada projects stability. This reputation is its biggest export of all, turning Canada into a preferred partner in an unpredictable global market. The U.S. Canada trade flip. One of the clearest signs of shifting trade power is the flip between the US and Canada. For decades, the US was the senior partner in the relationship, dominating exports and setting the terms of trade. But today, the picture looks different. Canada has become the largest trading partner of the United States, surpassing both China and Mexico. This isn't just about geography, it's about reliability. When supply chains strained during the pandemic and US sanctions disrupted flows of goods, Canada was there to keep trade moving. Take the automotive industry as an example. The US and Canada share a deeply integrated auto supply chain. Cars assembled in Michigan often contain parts manufactured in Ontario, and vice versa. As American companies struggled with supply shortages from overseas, Canadian suppliers stepped up to fill gaps. This strengthened Canada's role in the sector. Energy tells a similar story. The US now imports Canadian oil at record levels. Canadian crude makes up the majority of America's foreign supply. At a time when the US is pushing to reduce reliance on the Middle East and has strained relations with Venezuela and Russia, Canadian energy has become indispensable. And here's the kicker. US instability has often pushed countries toward Canada. When America imposes tariffs or sanctions, companies and governments look for alternative suppliers. Canada, with nearly identical quality standards but far less political baggage, becomes the natural substitute. The result is a quiet but profound shift. Canada isn't just America's neighbor anymore. It's America's lifeline in trade. And increasingly, it's the world's alternative when U.S. politics get messy. Global trust shift: why the world prefers Canada. Trade isn't only about money, it's about trust. And right now, much of the world trusts Canada more than it trusts the U.S. One reason is Canada's network of trade agreements. Through deals like CETA with the European Union and CPTPP with Pacific nations, Canada has positioned itself inside some of the world's most important trade blocs. While the U.S. withdrew from the Trans-Pacific Partnership, Canada leaned in. Today, it reaps the benefits of easier access to Asian markets. Canada is also seen as politically safer. The U.S., with its deep partisan divisions and unpredictable policy swings, can change course overnight. Canada, by contrast, projects moderation and stability. For businesses and governments making long-term deals, that predictability is priceless. There's also the perception of Canada as a neutral middleman. While the U.S. is often viewed as a self-interested superpower, Canada has built its brand as a consensus builder. Whether in NATO, the UN, or trade forums, Canada is seen as pragmatic, less confrontational, and more collaborative. That reputation translates into trade deals and strategic partnerships that Washington increasingly struggles to secure. We can already see countries shifting their strategies. European nations looking to diversify away from Russian gas have turned to Canadian LNG. Asian economies nervous about over-reliance on China are buying more Canadian agricultural products. Even in critical minerals, nations from Japan to Germany are forging supply agreements with Ottawa, not Washington. The world isn't replacing the U.S. outright. America is still a giant. But there's a growing sense that when reliability is at stake, Canada is the safer bet. And that quiet shift in trust may be even more important than the $700 billion trade gap itself. Key sectors where Canada beat the U.S. If you want to see how Canada quietly edged ahead of the U.S., you have to look at the sectors where its strengths really shine. Energy and resources are the backbone. Canada's oil sands in Alberta are one of the largest proven reserves on the planet. Add to that its growing liquefied natural gas industry on the Pacific coast, and you have a country positioned to supply both North America and Asia with fuel for decades. On top of that, Canada is the world's second largest producer of uranium, which is critical for nuclear power. While the U.S. struggles with energy politics and dependency on imports, Canada has become the go-to supplier for reliable, stable energy. Agriculture is another pillar. Canada is among the world's top exporters of wheat, canola, and pulses. Its seafood industry, especially from the Atlantic provinces and British Columbia, supplies markets across Asia and Europe. At a time when food insecurity is one of the world's biggest issues, Canada's reputation as a consistent supplier makes it invaluable. On the tech front, technology and services are rising fast. Toronto is now recognized as one of the top global hubs for artificial intelligence research. Montreal is home to world-class aerospace companies and AI labs. Vancouver has become a growing fintech and film tech center. The U.S. might still dominate Silicon Valley, but Canada's tech ecosystem has carved out niches where it's punching above its weight. Then there's logistics and shipping. As U.S. West Coast ports like Los Angeles and Long Beach choke under congestion, Canadian ports in Vancouver and Prince Rupert have become more attractive to Asian exporters. Rail lines link these ports directly into the U.S. Midwest, creating a backdoor into the American market that bypasses bottlenecks. And finally, the green energy transition. Canada is already a world leader in hydropower. Most of Quebec and Manitoba are powered almost entirely by renewable energy. Add in critical minerals for electric vehicles, cobalt, lithium, and nickel, and Canada has the resources to fuel the next phase of the global economy. Put it all together, and you have a nation that has turned its geography and resources into leverage. It has positioned itself in energy, food, technology, and green transition sectors where the U.S. has stumbled. America's mistakes: how they created room for Canada. Canada didn't rise in a vacuum. Much of its success comes from America's own mistakes. First, the over-reliance on China. For decades, the U.S. offshored its manufacturing, hollowing out domestic industries. When tensions with China escalated, Washington suddenly realized how vulnerable it was. But by then, the supply chains were already gone. Canada, with its natural resources and trade agreements, stepped in to fill some of those gaps. Second, the trade wars. Instead of strengthening alliances, U.S. policies often alienated partners. Tariffs on steel and aluminum didn't just target rivals. They hit allies like Canada and the EU. This pushed many countries to look for alternatives. Canada positioned itself as a more cooperative player. Third, infrastructure bottlenecks. U.S. ports, railroads, and highways have been underinvested for decades. Meanwhile, Canada expanded its port capacity, improved rail connections, and streamlined customs. When supply chains snarled in California, Canadian ports quietly absorbed the overflow. Fourth, political gridlock. In Washington, trade deals take years of partisan fighting. By contrast, Canada signed agreements like CETA with the EU and CPTPP with Asia, opening doors the U.S. chose to close. Those deals gave Canadian exporters a head start in markets where the U.S. lost ground. Finally, there's the loss of trust. Businesses and governments see the U.S. as unpredictable. One administration signs a deal, the next tears it up. Canada, by comparison, has cultivated an image of steady, bipartisan trade policy. That trust is worth billions. In short, America's missteps created the space. Canada didn't steal the U.S.'s dominance. Washington handed over chunks of it through neglect and short-term thinking. The new North American power balance. The shift in trade isn't just global, it's regional too. Within North America, the balance of power is changing. For decades, the U.S. was the undisputed giant, with Canada and Mexico as junior partners. But now, Canada and Mexico together are quietly replacing U.S. dominance. Both countries have leveraged the USMCA trade agreement, the updated NAFTA, to their advantage, while the U.S. has been bogged down by internal politics. For Canada, USMCA locked in secure access to the U.S. market while opening doors to export more energy, agriculture, and manufactured goods. Many of the wins in USMCA were subtle but significant. Rules of origin in the auto sector that favor Canadian parts, protections for Canadian agriculture, and clarity for its tech industry. Mexico has surged as a low-cost manufacturing hub, particularly for automotives and electronics. Combined with Canada's role in energy and resources, you now have a North American trade triangle where the U.S. is no longer the sole leader. Cross-border supply chains reveal this shift. Cars built in Detroit rely on engines from Ontario and wiring harnesses from Mexico. U.S. companies increasingly depend on Canadian and Mexican suppliers just to keep factories running. Instead of the U.S. dictating terms, it now has to treat its neighbors as essential equals. Looking ahead, there's even a possibility that Canada could become the face of North American trade abroad, with the U.S. seen as unstable and Mexico facing its own political challenges. Canada's reputation as a reliable, diplomatic middle power makes it the natural ambassador for the region. The North American trade bloc isn't going away, but the balance within it is shifting, with Canada playing a far bigger role than most people realize. Global implications. What this means for the world. So what does all of this mean for the world? If Canada continues its rise, it will carry more weight in forums like the G7 and WTO, giving middle powers a stronger voice. A more balanced North American bloc, where trade isn't dominated solely by Washington, could also stabilize global markets. Countries that once had to rely exclusively on the U.S. may now find alternatives through Canada. For Europe and Asia, this is a welcome change. Europe can tap Canadian energy and food without being caught in U.S.-Russia politics. Asian economies can trade with Canada through CPTPP without being dragged into U.S.-China tensions. Canada's neutrality gives it leverage. But if the U.S. keeps declining, the implications are even bigger. Allies may start shifting their loyalties and supply chains, turning to Canada, Mexico, or even other middle powers for stability. The era of the U.S. as the singular trade superpower would truly be over. Canada also becomes a template for other small to mid economies. Countries like Australia, Norway, or even Chile may see Canada's rise as proof that you don't have to be a superpower to matter in global trade. You just need resources, smart diplomacy, and trust. In a world increasingly multipolar, Canada's story suggests that the future won't be defined by one giant. It will be defined by a network of reliable middle players. So where does this all lead? In the short term, Canada is likely to continue benefiting from U.S. turmoil. Every time Washington imposes tariffs, picks fights with allies, or experiences political gridlock, Canada quietly gains contracts, trade deals, and market share. The global demand for energy, food, and critical minerals isn't slowing anytime soon. This plays directly into Canada's strengths. In the long term, however, Canada faces challenges. Its economy is still heavily resource-dependent, which leaves it vulnerable to commodity price swings. With a population of just under 40 million, it can't match the scale of the US or China in production or consumption. Sustaining global influence will require constant innovation and diversification. The US, meanwhile, isn't out of the game. America still has enormous strengths: world-class universities, a massive consumer market, military power, and technological leadership in many areas. If Washington can fix its supply chains, invest in infrastructure, and rebuild trust with allies, it could reclaim lost ground. So is Canada's rise permanent, or just a temporary cycle while the US stumbles? The truth is likely somewhere in between. Its new role in global trade is here to stay, even if the balance shifts again. Final thoughts. Let's circle back to that number, $700 billion. It isn't just about the size of America's trade deficit or Canada's export gains. It's a symbol of lost dominance, shifting trust, and a changing world order. The US isn't disappearing. It will remain a giant in global trade for decades to come. But what has changed is the monopoly it once held. That monopoly has been chipped away, and Canada has emerged as the quiet winner. Not through flashy headlines or dramatic power plays, but through stability, reliability, and smart positioning. For decades, the story was America versus China. But perhaps the more surprising story is happening closer to home. While Washington argues over trade wars and tariffs, Ottawa has been quietly reshaping North America's role in the global economy. And that's the final takeaway. Sometimes power doesn't shift with noise and fireworks. Sometimes it slips away quietly, and your neighbor picks it up.